Welcome everyone to the Vested Interest channel. This is Shane and it is that time again. We are turning the page on another month here. So we're going to cover the two stocks that I'm going to be focused on buying in December. If they stay, in my buy range, if they were to blow past it, then I would back off a little bit. And these won't be the only two, but they will certainly be the two I am going to be focused on the most. And that's Owens Corning. This is out of the industrial sector, and Vici finally pulled back under 30 and it seems to be staying there for now, so we're going to take advantage of that. And this is a REIT out of the real estate sector. Hey, go ahead and hit all those buttons down below. It really does help out the channel. Share with anyone you think that might find value in the content. Like, subscribe, hit the notification bell, drop a comment down below. Let me know what you are going to be focused on for the month of December. Now let's get into the video. All right, first up, Vici Properties here. This one we have been buying. We're going to continue to focus on it again. I like it under $32. It's dropped under 30, so I like it even more. Going to continue to add to this one right now. Closed out the week, and happy belated Thanksgiving to all of you out there. This was Thanksgiving week, so we had a short week, and the market closed a little early on Friday, which I missed my Friday buy. But more about that whenever we do the portfolio update. But it did close out the week at $28.82. We are talking about Vici Properties, ticker VICI, again out of the real estate sector. This is a REIT here. So current PE ratio, price to earnings ratio, $10.95. Forward PE, $10.23. But for REITs, you should be looking at funds from operations. I don't pull that together. I'm going to look at it just like I would a normal stock, but that really is the PE for a REIT. Look at funds from operations. But here we're going to keep going through this one anyway. Market cap of $30.80 billion. 52-week range as low as $27.98, as high as $34.03. So they are very, very close to their 52-week low currently. Beta of 0.71, so typically less volatile than the overall market. The analysts do call this one a consensus buy, price target of $35.53, so not quite $7 upside from where it currently sits, which would represent a potential 23.28%. Current dividend $1.80. They are a quarterly payer, so divide by 4, and starting dividend yield very high on this one, 6.25%. So if you wanted an income play right here with some potential growth, this is a good one to look at right now, in my opinion. Ex-dividend date was September 18th. So you probably didn't get the last dividend unless you owned them before that, but you could lock in the next one if you were to buy them now, though you're going to have to wait a couple months to get it. Earnings date October 30th, so you can look at that. That was last month. If you're interested in the earnings call, you can see here a bit choppy on the one-day chart. Now let's look at a couple other metrics here. Revenue, you can see that it is up and to the right. We want to see growing revenue over time. You can see here $3.978 billion in revenue. Now it does look like it slowed a little bit in the last couple of years, 2023 to 24 in the trailing 12 months, but it is still growing. And again, that's what we want to see over time. Profit margin, now it looks like the profit margin has flattened out a bit, but look at the profit margin, 70.18%. Okay, I'm not going to complain if it's a flat profit margin if they're pulling in 70%, right? If we're talking about 8%, 6%, 4%, 3%, something like that, maybe I'd complain a little bit if it was stagnant and not growing, but I'm not going to complain about 70%. EBITDA, earnings before interest, tax, depreciation, and amortization. This is the actual earnings before they do all of the funny business. So you can see, again, up and to the right, which is what you want to see. Nice, steady growth. Very nice, steady growth over time. Now we're going to look at assets. Oh, and I look at assets over liabilities. I like a 2-to-1 ratio or better typically. You can see here, Vici's assets, $46.54 billion, and their liabilities, $18.44 billion. So very nice. If they had to sell off some assets to pay off their liabilities, they have more than enough to do that and still maintain the business asset heavy, even if, like I said, they were to pay off all their liabilities utilizing their assets. Excuse me, Vici's cash and cash equivalents. Now this one, they have held steady for the last few years, but it is down from their high, but certainly up from their low. You like to see a business have some cash on hand. They're holding $507.5 million. Total debt, now this is going to scare some people. They do have a lot of debt, $17.68 billion, but again, keep in mind they could sell off their assets to pay off their liabilities if they had to pay down this debt, and they do hold some cash on hand. Now, shares outstanding, you can see this is up and to the right. Now, typically, I hate whenever a company is diluting me as a shareholder, but REITs do that Some master limited partnerships do that. Some other companies do that as well. It's part of their business model. Now, if they're diluting you a ton, tech companies, whenever they first get started, do that because they use a lot of stock-based comp to pay people, especially startups or whenever they're first starting getting out. And then maybe they shift that later and start buying back shares. So I'd like to typically see shares going down, but before I understand what they're doing. Now, I do like that it has slowed over the last several years, right? 2023, not quite as much growth as we saw in 2022. 2024, a little less, and then the trailing 12 months looks like it's even flat. So I like that. So I'd like them to be buying back shares at some point, but right now I understand they're growing. They're still trying to expand their portfolio. So part of that is going to be issuing shares. All right, so that is Vici Properties. Next up, Owens Corning, ticker OC, again out of the industrial sector. This is one I have been buying a little bit, and I'll be honest, this one has really rebounded off of the low. I think I was buying this in like 103. I even think I got a couple of shares in the $90 range here maybe 2 weeks ago. Last week was down in 103. Maybe even at the beginning of this week it was still down in the 103 range. Maybe it was 105 or 108. But this one has really rebounded quickly. It's at $113.24. Looks like it was down a little bit in the after hours there on Friday, but we'll have to wait to see what it opens at on Monday, because this is one I'd like to get to 100 shares, and I am oh so close to getting there. It is an existing position, as is Vici. You can see here, price-earning ratio, not applicable. Their forward PE is 11.15. I don't know why that is saying not applicable. I'd have to go look into that. EPS, earnings per share, negative 5.67. We don't like that. I would like to see them bring their earnings per share up. Their market cap is $9.31 billion, 52-week range as low as $97.53. Again, they were just here 2 weeks ago. They were right up against their 52-week low, and they've really rebounded already into the $110, $113 range. So might be one that slingshots back up. This is one I was up about 90% on here not too long ago, and it does have some gyrations, as shown by its beta of 1.33. So it is more volatile than the overall market, and the 52-week high was $208.70. I didn't mention that. Analysts do call this one a buy as well. Price target of $160.33, so quite a bit of upside from where it currently sits. That would represent a potential 41.58% upside if you were to lock in this 113, 112 range right now. Their earnings date was November 5th, so just past that if you're interested in that. And their ex-dividend date was October 20th. So again, if you buy them now, you will lock in the next dividend payout, but you're going to have to wait a couple months to get it. All right, let's look at the numbers on this one. Revenue, again, up and to the right. That's what we want to see. Currently $11.66 billion. Now their profit margin, maybe this is why their price to earnings was low. They've hit a negative profit. We don't want to see that, right? And we did see a decrease here. Excuse me, in 2024. I'm sorry, my sinuses are kicking my butt today, people. Trailing 12 months, again, negative. We want to see that turn around. So that is not good. You don't want to see that. But EBITDA earnings before interest, tax, depreciation, and amortization is up and to the right. We do want to see that. Total assets up and to the right, but again, we want to compare this to liabilities. Again, I typically like a 2-to-1. They're at $13.52 billion in total assets. Liabilities at $9.08 billion. So not quite the 2.1, but not too far off either. I'd like to see them get the liabilities down and bring up their assets a little bit. Cash and cash equivalents. Now they still do have $286 million on hand in the trailing 12 months, but their debt, again, $5.61 billion. But again, keep in mind, if they had to, they could sell off some assets to pay off their liabilities and pay down debt. Now this one, this is how you want to see shares outstanding look. Down and to the right, right? I want shares outstanding. I want them pulling shares out of the market instead of issuing more shares into the market. That's what I want to see. So I do like this downward trend, and I want to see them continue 85.03 million in shares outstanding and continue to buy back those shares, pull shares out of the market. And as a shareholder, that makes me more of a shareholder of the company, whether I buy more or not. So that's what I want to see from companies. All right, Owens Corning and Vici, those are the two I'm going to be focused on, but they certainly are not the only stocks right now that I believe are showing some value. Pfizer, I've been nibbling on this one a little bit. This one is in my portfolio. Verizon, I did add some to this not too long ago when it dropped in the $38 range. General Mills, this is not in my portfolio. It is one that I've always seriously considered putting in the portfolio. It is a blue chip stock. It is a slow grower, slow dividend grower, but it does pay a dividend. And again, General Mills is such a staple But I've got Procter & Gamble. I got SYY. If I was to switch out a position, SYY for this one, maybe we do something like that. But General Mills, I believe, is still undervalued. Zoetis, same thing. I'm heavy in healthcare, or I would probably add Zoetis. But I need to probably switch out something. I've got Pfizer. I've got Johnson & Johnson. Pretty heavy position in Johnson & Johnson and Pfizer. So do I need to sell one of those to buy something else? I don't want my portfolio to be getting too large with too many positions that it's hard to keep track of and keep up with. But Zoetis is another one I feel like is undervalued. General Parts Company, American Water, still think this one is undervalued. And if it got back into the 1-teens, 113, 115, I would probably add this back into the portfolio since I only hold one utility company. American Water is out of the utility sector. Pfizer is healthcare. Verizon is communications. General Mills is consumer staples. Zoetis is healthcare. General Parts Company is industrials. Again, American Water is a utility company. Chevron, another one. I think that there's some value there. Energy stock. Procter & Gamble, another consumer staple here. I do own this one. I've been adding a little bit of shares here over the last month or so. Under 150. I love this. Chubb is one in my position. I think wouldn't be a bad add right now. Domino's, this is a recent addition to Warren Buffett's portfolio. Looks like, according to his 13F, he was buying this past quarter, and it is still below his cost basis. So you could pick up a Warren Buffett stock cheaper than Warren Buffett paid for it right now. Same thing with Occidental. I haven't been adding too much to this one, but I have nibbled a little bit. Probably am going to add a little bit here. This may even become the third one on my stock. Should have maybe been the third one on my stocks to buy for December list, but we will be adding some to Oxy most likely. Badger Meter, not in my portfolio, but is an interesting company. I still think it's fairly valued, if not undervalued. Valet, I still think is fairly valued. Pool Corp, another Warren Buffett stock you could get cheaper than the all-time great Warren Buffett. I think he's one of the all-time greats, at least one of, if not the all-time great. Another one you could get cheaper than he bought. So that's Occidental, Domino's, Pool Corp, 3 companies you could buy. Now Chubb is up. That's another Warren Buffett stock, but it is above his cost. Right now, Procter & Gamble is another Warren Buffett stock, but that is way, way above his cost because he bought it a long, long time ago. Pool Corp, though, I believe is still undervalued. And again, another one you could get cheaper than one of the greats, Warren Buffett. And Comcast, another one that I will probably nibble on. I've been adding to it so much, just can't catch a break. It is much lower than my cost basis right now. This one is my biggest loser, quote unquote, and I don't mind adding to it. But for this month of December, Owens Corning and Vici will get the most of my attention. Let me know what stocks you think are undervalued currently that maybe are not on this list, or if you're adding to any of these, let me know that as well down below. Again, love to hear what you are adding to your portfolio for the month of December. Let me know what you think of the video. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Click that subscribe button down below. And drop a comment. Let me know what you think. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you got any questions, go ahead and drop them down there. And again, let me know what's going on in your portfolio. What are you going to be focused on for December? Can you believe it? It is December already. December 2025, quickly wrapping up 2025 and on to 2026 we will go. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend and you had a very happy Thanksgiving. We'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing during the educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.